please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. You're watching Halftime Report. I'm Samira Abdi and with me is Nigel D'Souza. And Nigel, it's a day for the Bears today. So as we speak, the key indices sitting with a cut of about 1%. It's a 100-point cut on the Nifty. The SENSEX is down nearly 270 points. Look at the mid-cap index, 250 points gone. And any sector, you name it, that sector is really under pressure.
Absolutely, Sumera. And if you take a look at it, at least if you're looking for a few positives or a few levels that you're looking at, the 10,000 mark. That's definitely a level you're looking at, because remember, that's when, in fact, the 20 DMA and the 50 DMA is at around the 9,555 approximately. So on a closing basis, we'll be eyeing the 10,000 mark very, very closely. Whether or not we can see a second half recovery, that's going to be quite crucial. But otherwise, after seeing a bit of a decline in the first half hour odd, we have sustained that decline, which is not very good news. Yeah,
that's true, actually. And the low for the day now becomes 10,000. So considering that it's been tested, one would imagine that all eyes will be on whether it can hold out. But let's get started. These are our top stories. Market under pressure from weak global cues and a depreciating rupee. Nifty tests the 10,000 mark. SENSEX sheds 270 points. Mid-cap index takes a knock. Jamie Dimon of JP Morgan tells CNBC-TV-18 that India is on the right growth path, says government increasing fiscal deficit should not be seen as a negative.
The rupee slips to near 6-month lows against the dollar on speculation of widening fiscal deficit. JP Morgan's Brijen Puri says that the Reserve Bank is not comfortable with the continued rupee appreciation.
Banks trend with weakness on the back of rising bond yields as the market fears an impact on the treasury books.
And metal stocks among the top index losers as global base metal prices cool off. S&P cut off China's sovereign rating adds to the nervousness.
And it's a decent listing for Reliance Home Finance. The management speaks exclusively to CNBC-TV-18, say they're looking to grow their loan book at a 50% compounded annual growth rate over the next 3 to 4 years. All right, let's get started with all the stock-specific action. Then it's time for movers and shakers. And first up, over to Anisha, who's tracking an order win for KNR Constructions. Anisha.
Well, yes, Samira, thank you for that. Yes, KNR has bagged an order. The JV actually has bagged an order worth around 880 crores. Now, the share of KNR in this project can be around 450 to 500 odd crores. And this is for building up a reservoir in Telangana. The project is expected to be completed over a period of 18 months. Now, Nomura has written a note on it, and they are expecting a revenue contribution of around 290 crores as well as an EBITDA of around 44 crores in FY19. Given this order inflow, they expect that the company would not only just be able to meet their order inflow guidance of 2,000 to 2,500 crores in FY18, but also surpass is what they say. They of course maintain a buy call on the stock with a target at around 287 per share, and they're also seeing a clear visibility of another order inflow to the tune of 1,800 to 2,000 odd crores. So clearly things looking up, and the stock is holding up in green as well today.
Okay, Anisha, thanks so much for bringing in some good news and otherwise, quite a dull trading session. But Abhishek's with us as well. He's going to tell us about Reliance Home Finance. That one has listed with some gains. Abhishek.
Exactly, this listing has been in line with what we were anticipating in the morning, that between 80 rupees to 120 rupees can be kind of listing that we are seeing. Currently at 109 rupees, if you look at the book value of 40 rupees for FY18, the trading multiple is in the range what other HFCs are trading. You look at the loan mix, 44% is the non-housing portfolio, and therefore the NIM is at the high end at 3.9%. The asset quality for Reliance Home Finance is stable at 0.8% due to the fact that 78% of their customer base is from salaried class, therefore giving regular payments. Back to you.
All right, and Naveen has United Breweries on his radar. Naveen, why is that?
Motilal Oswal has in fact, Sumaira, given an upgrade on this stock, and they have given a rating of buy with the upside of from the current levels of close to 20%. The target price is at around 980. Remember, for the industry as a whole, there were three headwinds. One being that the GST impact, one also the alcohol sale ban at the highways, and the third one being prohibition at a few states. So now what they believe is that after the completion of all these things, GST behind us and the alcohol ban as well as the prohibition behind us, the overall problems that were envisaged, that has not been that scary. The other three things important for the company per se, one being that the market share gain. Remember, the company has been gaining almost 100 basis points in Q1 FY18 itself. Also, new launches. The company has been launching sub-brands in the Heineken space, and that has been seen a lot of traction, and the brokerage believes that this will improve the gross margins going ahead for United Breweries. Third one being that the throughput, that is the utilization on their specific outlets, that has been growing quite strong. This is one of the reasons why the brokerage has upgraded United Breweries with an upside of close to 20% from current levels. Back to you.
Okay, all right. Naveen, you're bringing the cheers all the way. But otherwise, the best performing space in the last couple of years, in last 1 year as well, has been the metal index. Unfortunately, this week, Manisha, after quite a while, you're not bringing us good news. This week itself, I think a lot of those base metals have corrected. Iron ore as well has taken a sharp knock.
Well, it could be good news for some people, you never know. But yes, the sharpest of declines coming in for the iron ore prices. It's down 4% today and is down 11% for this week. There have been reports on how the steel capacity is near peak, and that seems to be weighing onto the steel ingredients, the raw materials, that is. The other losses, of course, have come in for the lead prices. That one is down 7%. Nickel is down 5%. Remember, Shanghai has increased the trading fees for nickel, and that really seems to be weighing on that space. Copper, aluminum as well, down between 1 to 2%. Apart from the individual fundamentals, it also has to do with the fact that there is some long liquidation happening for many of these commodities. There, of course, are concerns about North Korea. The Fed hiking interest rates in December also is weighing, and most of that, the S&P cutting China's sovereign credit rating, is something that has been the final trigger that has taken most of these prices in the negative.
All right, and everything that has an exposure to a bond book is taking a hit in trade banks and NBFCs. The fear that there could be an impact on the Treasury. Abhishek, what more can you tell us about this?
So the fact is that the government's fiscal deficit is currently 93% of their estimation, and this fiscal deficit will continue to rise because government does not intend to cut down on their expenditure, while the growth is coming down and slowing down and has been a laggard in terms of revenue generation. So what this will lead to is increase in fiscal slippages or fiscal deficit. So INR will be under pressure due to rise in fiscal deficit, while you can see outflow from foreign portfolio investors on account of deteriorating macroeconomic data from India. So therefore, yield will remain under pressure because you cannot have any more further rate cuts as core inflation has remained high, and RBI will watch for this fiscal slippages number which will be coming out from government. So overall, this will impact the cost of borrowings for NBFCs, which borrows heavily from bond market, and also for Yes Bank, which not only has, its GSEC portfolio where the treasury yields will lower down, but also on the borrowing side where they borrow heavily from the market. Back to you.
All right, guys, thanks for that. A quick recap for all the stocks which are buzzing. We have KNR Construction, Reliance Home Finance, United Breweries, Yes Bank, Bajaj Finance, Ujjivan, IIFL and Canfin Homes, the last few on the downside. But the primary market space continues to attract attention, and another interesting IPO has been lined up. Pratap Snacks opens for subscription. Varinder is here to tell us what it looks like. Varinder.
Well, it's an interesting company, of course, and again, a consumption theme if you want to play in India with targeting those small packet buyers, 5 rupees or less. So it's a good company, and importantly, the top line has been growing, I think, which is what everyone wants to play in the packaged food business space. So just to take you to the numbers, at a price of the higher band, which is 938, the market cap will be nearly 2,200 crores. If you have to watch out for FY17 numbers, the sales was nearly 900 crores, which has been growing at a CAGR compounded annual growth rate of nearly 27% the last 3 years. The problem is the margins. The margins are as thin as the wafers itself. EBITDA margins of 4.5%, and PAT was only 10 crores with EPS of only 5 rupees. So FY17 was not the barometer of what the company has done, because if you just go in FY16, they did an EPS of nearly 13 rupees. So most of the analysts on the street believe that FY18 the growth will come back, and they are estimating that profit will be nearly 30 crores for FY18 and FY19 nearly 40 crores. So even on FY19 estimate, the stock on a price earning multiple is trading around 50 times. So, but again, as I said, the top line has been good for the company in the last 3-4 years. EBITDA growth and the PAT number are the one to be watched out for. Management in the morning was very confident. They said they have all the levers in order to improve the margins going ahead, and they were very confident in terms of growth, sustainability in terms of top line. If we watch out for other food companies, DFM Foods, which is listed space in the peer, again, this company has again seen huge valuations given by the markets, with the FY17 price earning multiple of nearly 60-70 times. So packaged food business really doing good. This interesting company coming up. Valuations, of course, are looking really, really high. But again, that is what market is giving you. Just lap it up. All right. Thanks so much for that, Varinder. Just to add, Pratap, snacks. So there in the first quarter of this year, I think the margins have improved already. So we'll have to keep an eye out of what the management is saying. And in terms of DFM Foods, well, they've done 350 to around 400 crores in the last couple of years. Now their capacities have gone up by roughly around 35 to around 40%. So the top line over there as well is expected to go up. Nonetheless, any which ways you want to look at it, valuation-wise, you're asking for very, very premium value. Let's keep an eye out on the markets then. Sumaira, if you take a look at it, we are seeing some a fresh round of selling pressure. Actually, there was a bit of a pullback, but some of these metal stocks are selling off. So Hindalco and Vedanta, remember, there are big gains. The stocks have gone up 3-4 times just in the last 18 months. So just take a look at that. Hindalco should come up for you. That's taken a bit of a knock. And yesterday's star, in fact, was Dr. Reddy's. Just take a look at what's happened over there. That stock as well is moving lower. And Ultratech Cement is the other one that's clearly taken a sharp knock. But the pain, Sumaira, is far worse in the broader market. So if you pull up a JSW Energy, that stock's taking a knock. You pull up an IFCI as well. That one's taking a hard knock, in fact, in the last few minutes. So let's keep an eye out on that stock as well. But I think let's get you some market opinion then that we got in from the research head of JP Morgan. He says that India has started to deviate from emerging market story. Let's listen in.
India started to deviate from the EM narrative. One is that we had some disappointment with growth, and we were ourselves forced to downgrade the full-year growth forecast. So while we are upgrading many other countries, we downgraded India. Granted, at 6.8%, which is the latest projection for this year, is still the fastest-growing economy in the planet. So so much for getting too upset with that number. But I think that I think what we're seeing in general, the interpretation that we have for this deceleration and this negative surprise is that we're seeing the short-term cost of the government deciding to take important structural reforms that will take time. I mean, we think that the benefit will be seen eventually in the medium term. There was an element of why commodities have rallied so much. I think that the fact that global growth is doing well is certainly a support factor, but I would say that when you look at copper or other base metals having rallied 25% year to date, you think, okay, the global economy looks fine, but not that good, right? So there is an element, probably speculation. There is this element of accumulation of reserves or commodity stockpile by China. So I think that after this rally, some correction is probably due, and this is probably what we're seeing here.
All right, so that's the word coming in from the top team of JP Morgan, but the focus remains on the push towards e-vehicles. And here's a CNBC-TV-18 exclusive. Tata Motors, we understand, is jointly working with JLR to develop batteries for electric vehicles. Utkarsh Chaturvedi brings in all those details. Utkarsh.
It is a joint development of the battery cell which we are picking up is being done by Tata Motors and Jaguar Land Rover together. It is in the European Technical Center of Tata Motors that both the engineers are working and developing a battery cell together. Also what we are picking up is that both the companies are looking at a joint sourcing of the components for electric vehicles. If I break down what runs an electric vehicle, one is a motor and second is the battery. So what we are picking up is it's the battery which will be really the same in both the cars. cars, and it's the motor which really provides the power and acceleration will be different in Tata Motors and Jaguar Land Rover. Now, how it will benefit the companies? One is on the economies of scale, and second, JLR can really bring in the technical expertise, and Tata Motors engineers can really look to bring the cost down of the fuel cell, which is a very important hurdle at this point of time when it comes to electric vehicles. Also, what we are picking up is that Tata Motors will be showcasing its Tiago Electric within this financial year, and JLR is also stepping up the game when it comes to electric vehicles globally. So clearly, both the companies are coming together once again to develop a new vehicle. In fact, the Q5 platform, which will be a joint platform by Tata and JLR, was the first time that both the companies came together, and the Q5 platform will be launched in 2019. When we spoke to Tata Motors for an official comment, the response is that they do not comment on their sourcing and future product strategies.
Utkarsh, thanks much for getting us those exclusives. So watch out for that electric battery for everyone who's looking to actually ride the...
Around that 10,000 odd mark, so just keep your eye out on the screen. Well, a couple of news flows that we got in the last few minutes. There was some talk of cutting the tax on imports. So maybe, in fact, we could focus on some of these jewelry counters. I think that was the flash that was up for you on the screen. So, maybe a Titan or something is something that you should be looking at on the back of that news. So let's pull up a Titan. I don't think we had any kind of a reaction. No, we're not much of a reaction over there. But the line that, in fact, had come up for you on the screen was that they're mulling some tax cuts in terms of import of gold. So that's why a bit of up move. And also, in fact, yes, the Nifty, that's the one that we were talking about. 10,000 mark is gone. Remember, in fact, this is very, very important because the technical level as well has gone with that breach. So I think the 20 DMA was at around the 10,000 odd mark. So that's quickly gone away. And that is what explains you're quickly seeing a good 10 to around 15 point downtake. But I think Ashwini is with us. Let's go straight across to Ashwini. Ashwini, as you had said early morning, any kind of bounce, you look at shorting into the Nifty. Now we're below 10,000. Are we breaking down? Are you seeing deeper levels in today's trading session itself?
So now the next support here is 9980. So basically the market is weak, and I think there's continuous sell-off since morning. So chances are there should be some amount of decent pullback. But for that to play out, possibly Europe will have to open up better. But it's clear that 10,000 is now giving way. As far as individual stocks are concerned, Kotak is a buy with a stop of 1,000, target of 1,065. Cipla is a buy with a stop of 590, target of 615. And Srey Infra is a sell with a stop of 106, target of 94.
All right, we'll wait by for the European markets to open. I think another 2 minutes to go, but the futures are indicating a mildly negative opening over there. So, doubt if there could be any support coming through over there. I think we're also getting in some visuals from London. That's right, the London Stock Exchange. Arundhati Bhattacharya, the SBI chairman, is at LSE, and those are the live visuals that are coming in. But Prakash, back to the market. What's your intraday call looking like now that 10,000 is gone?
It's gone temporarily, no doubt, but it's a good place if it has to bounce from. Purely a technical bounce could come in. After seeing a deep cut, sometimes we get a big up move. I'm waiting to buy. I don't know when I will do so, but I'm waiting for some kind of a violent move so that I could buy. Until that happens, it's a sell. Bank of Baroda certainly looks weak to me, and we can see a down move to maybe levels closer to 138 zones, stop about 146. Reliance Industries, again a sell. Looks like the way it's heading down, it can slide down to levels closer to 810 to 800 zones, stop about 840.
All right, okay, that's not looking good at all actually. As we speak, a lot of stocks are moving lower. Ashwini, L&T, that's the last one that's suddenly taken a sharp knock, and that's what's really caused the last 10-minute downtake. It's now down close to around 2.5%. I remember a couple of weeks ago that was what was leading the market higher. Sharp downtick there. Ashwini, L&T, what's the outlook there?
See, as of right now, L&T cannot stand against a falling market.
Yeah.
But it's clear that it's been in some sort of an uptrend, and maybe it should find support again around 1140, 1150 zone.
All right, a lot of these stocks actually now giving way. Look at something like a JSPL that's down about 5.5%. Likewise for a Reliance Cap.